Next, I also want to emphasize on the viability aspects. So, feasibility is seeking is it possible, whereas viable is seeking whether it's financially sound. You see, so project when we talk about feasibilities, when we talk about feasibility studies, in the end, you need to answer that: is it possible? You see, and whether it encompasses many things. But when it comes to viability studies, it's actually very very financial. Okay, actually, finance is a very good topic. You've got it covered in your finance subjects. Okay, but when it comes to finance, there's one very important point that we need to answer is, depending on the project itself, uh, the nature of the project itself, you need to think about the expenditure, you see, and how much the capital cost, how much is the maintenance cost, how much does it cost to continue run the project, in the end, how much you can sell and all that. And or some project is not about selling. What kind of revenue you can collect? Meaning that if it's water pipeline, you may need to collect the water pipeline. Electricity, you may need to collect electricity's money. Energy money to actually make money. And then it's all about money. This is a financial aspect. So the most important thing is you need to know where do you get the money. See, where do you get the money? Number one is the project sponsor. Like, who is the person that is going to fork out the money? And the money can be from bank loans, the company from bank loans, from the current reserve, from the profit from previous years. So, finance, you need to know how much money that you need, so that the sponsors need to be comfortable, meaning that the client or the people who is going to own the project, they have the money to foot the bill. So if they don't have it, they need to borrow it or they need to raise it from the shareholders. So you need to understand what is their assets, what is their liability, and in the end, do they have the funding to do it? So that is the first important point about the project, where the funding is going to come from. If your company is very unhealthy, you've got a very negative value, then you cannot borrow money from the bank. And nobody's going to sponsor your project. You see, so if you're a bad paymaster, it's difficult for you to get contractors to work for you. So again, your financial status or the financial status of the sponsors is very important. Okay, so where they're going to get the money from? Do they have the money and all that? So there's the questions that we have to answer, in terms of finance or financially viable project. Okay, so the stages in capital expenditure of the project, meaning that you need to identify, the you need to identify the estimates, you need to do the costing, you need to estimate the different components of the cost into that. So that the very important technique is the cash flow technique. So you need to know how much money is going out when and how much money is going to come in when. So again, cash flow, I think you learn this in finance. You're probably a lot better than me actually in terms of finance. But just to mention to you that this is a concern of a project. So project cash flow, okay, project cash flow will assess the project based on the project sponsors and also the health of the company. The cash flow, do they know what is the cash flow? Is it cash flow and funding? These two things are actually together. What is the net worth of the sponsors? If let's say they're bankrupt, can they sell all the assets and pay you back? And so that makes you want to invest. So cash flow is very important for the understand the cash flow, is because you need to understand where is the most negative period. If we don't have money to tie you over that negative period, then it's going to be a very big concern to the people who's going to invest in the project. So not all the time we fork money out from our own pocket. We need to find investors and all that. So if your cash flow is not healthy, company cash flow is not healthy, or the project cash flow is going to be very tough, for example, you only get a lot of money back towards the end, and in the beginning, there's a lot of money going out. Then you need to know the funding, where it comes from. So cash flow and funding are actually very closely tied up together. And this has to be a very healthy situation, a very good situation for you to understand whether it's worth it or not. And the last component, of course, is the profitability. Is the project profitable? If it's not profitable, if it's not going to bring more benefit than cost, then what's the point of doing the project? Then I might as well sit in the bank and sleep in the bank. Why should I work so hard to do a project, get myself stressed out, build something, I want to sell something, and I'm not making money? Nobody is doing charity. All organization wants to make money, and that is very fair. It's very fair. No businesses is looking to do charitable work. Okay, so we need to understand that contractor needs to make money, supplier needs to make money, manufacturer needs to make money, producer needs to make money. Everybody needs to survive and drive the economy. It's no point of driving somebody dead, one arm in the chain dead, and then it doesn't gain you anything in the end. Okay, so never drive businesses to the point that you gain everything and then lose everything. So what's the benefit? If they lose everything, in the end, nobody's going to do the business with you anymore. You see, you probably can't find any more suppliers who want to supply you. So what's the point? See? So make sure that everybody gets their profit. You earn money, I earn money, we all have profit. And profitability for every project is very important. If it's infrastructure project, the profitability is the benefit. Whether the people are happy, whether the behavior index is high, whether people the election result is good, these are all the small things that will add up. It's not in monetary terms, but the profitability is in other manner. But when we talk about finance, it's really profit and loss. So two very important financial statements is profit and loss account and balance sheet. So all this balance sheet will tell you the health of the company. Where is the assets, where's the liability, net assets, net liability, all the financial aspects of whether this company is a healthy company, whether it's on the brink of bankruptcy, can you invest in it for that? And profit and loss is about how much money is made, how much money is lost, expenses, and in the end, do you have profit? So, you see, essentially, cash flow, funding, and profitability, they are all tied in with these two sheets here, the balance sheet and the P&L, profit and loss account. Okay, so overall, this is a finance part of the project. So you've got the feasibility, the finance, and then the last bit is whether it's worth it or not. Okay, so worth it is, sometimes when we talk about worth it, we need to know, it may be looking like it's making money, but in the end, is it really going to make money? So we also need to look at the whole life cycle costing of the project. We need to look at operation, the maintenance, and all that. So this one here, I will cover in another life cycle costing. I will cover in another 3 sets of recording. Okay, it's going to be complementing with this part of the lecture. Then the last bit is, can you make a better project? Is this an optimized, this is the best value, worth and the value. What is the best value? So you may want to embark onto value engineering when the components are out already. You may want to improve on certain components so that you get a better value. So you reduce the cost, but the performance is a lot higher. So I will also give you 3 recording on value engineering. So these 2 LCC value, they're talking about whether the project is actually worth it or not. Is it worth the money or not? Is the value good or not? Okay. So I think that is what we're covering. Basically, this is all it is to coming to this stage is about, yes, we're going to go ahead with the project. This is the good work. We have the money to do it. And then, okay, that's a design. We're going to do the design. We, complete the design and proceed with the nitty-gritty, the small detail. And this is a part that we move into the actual work that needs to be done to contribute to the completion of the project.